Traders at UBA said they're expecting minimal trading activities at the Treasury bills market today as the Debt Management Office offers 277 billion naira to investors with 255 billion naira on the 364-day bill. Chuka Nwachukwu, head of ALM and balance sheet management at UBA, joins me for the outcome on today's auction. Chuka, thank you for joining us today. Let's get right to it. Talk to us about this offering from the DMO, 277 billion, and out of that, 255 billion on the 364-day paper. What results do we have so far, if they're out?
Thank you, Esther. Like you rightly mentioned, 277 is on offer. Result is not out yet. We expect to have the result maybe before 4 or a little after 4. The last auction, 1 year, printed about 56 basis points. From 20.68 to 21.24. Today, we expect the yield to, of course, to go higher, between 21.5 to 22.5 levels. This is as a result of MPC rate increase yesterday, and then, of course, we expect that investors on the fixed income market will demand for higher yield.
Now, for liquidity levels, we saw system liquidity was negative at the close of trading yesterday, owing to increased borrowings at a standing lending facility window at about 496 billion. Correct me if I'm wrong. But where are liquidity levels? What do they look like today?
So the liquidity is currently, market is currently short above 200 billion. Despite the fact that FAC came in about 1.3 trillion. Came into the system for FAC, and then even at that, we have this tightness in system liquidity. Part of the reason being the FX sales, of course, settlement for last Monday bond auction, which is today, and then the system before the FAC came in was already in debit of well over 1.5 trillion, and so we expect to see the system liquidity to continue to be tight, and that obviously has affected trading in the fixed income market. What we have so far on the bond side and the bill side is bearish sentiment.
Well, let's talk about the bond market and the yield curve. Where are we seeing, or where are you seeing the most action?
So on Monday, DMO offered 300 billion, about 276 billion was sold. This auction was supposed to have been, for this previous Monday. It wasn't hold due to the fact that the system was really tight. Still the same problem, and I guess it's because of the system, the tightness in the system. That is why suspicion was really low. However, the sentiment in the market is higher yield, and so at the last auction, the 2023, which is the longest tenure on offer, closed at 21 levels, and it's currently trading at 22 levels. So that shows you that market anticipates a higher yield, and that's why we have a bearish sentiment in the market.
Right. What is your forecast for yields in the medium term? I know the market obviously wants higher yields, but what is your forecast for yields in the medium term?
So as long as the CBN will continue to hike rate, we expect that investors in the fixed income market will demand for higher yield. And so because currently the government is borrowing heavily from the local market, and government has no choice but to make the yield attractive for for the investors. And so my forecast is between now and end of the third quarter, we will see these elevated yield levels. Towards the end of the year, we'll probably see a decrease in the yield levels.
Right. Now, the Naira slipped at the end of at the close of trading on Tuesday. Did it make a recovery today?
No, not at all. But it still hasn't gone as high as the demand required. This is due to constant intervention from CBN between throughout last week, and even from Monday to today. They've been intervening, and that is quite commendable, and not just to the deposit money bank, but also to to the BDC guys, and that has actually kind of like keep the price the rates a bit stable. So it's currently trading around 4,600, and then we expect it to remain at this level till the end of the week.
All right, Chuka, thank you for bringing us up to speed. Appreciate your time on the show today. Chuka Nwachukwu, Head of ALM and Balance Sheet Management at UBA.